are live, in which case, hello everyone. If someone could stick in the comments if you can hear me, that would be extremely useful. I am just going to keep an eye on that to make sure that people can see us and can hear us. I need to turn that off. Okay, sorry, I just had my my YouTube in the background. Sarah said, "Is it me? I can't hear anything yet." Tom's okay. Yeah, no, it looks like you can hear us now. So that's great. So welcome everyone. Thanks for joining us. A little bit last minute, but we've just been thinking through this week how we can best provide sort of ongoing support and value to all of you guys who I know have got a lot of questions on your mind about the property industry generally. Today we're going to focus specifically on one topic, mortgages and bank finance, and how that relates to us and in the current climate, and also looking towards the future as well. Over the course of the next couple of days and probably stretching out into the next couple of weeks, we're going to host a bunch of these calls looking at different subjects. We've got an accountant coming on to look at things like some of this financial support that we can get, depending on whether we're self-employed or company owners, that sort of stuff. Where we think the property market's going in the future, a whole bunch of different things just to try and guide you through the different questions that are on your mind. But today I'm delighted to be welcoming Lisa Orme. I was going to say to the show. This is a bit different from a normal podcast, although you've been on the podcast before, Lisa. It was good fun. But yeah, thank you for being here, first of all. Thanks for taking the time to do this.
No problem at all. Thanks for inviting me.
So it'd be great just to start off with a bit of a background for people who haven't come across you before. I'm not sure there are many people left in the property world in the UK who don't know who you are, but just, can you share a little bit about your own investment background and also life as a mortgage broker?
Yeah, absolutely. So I was 15 years a forensic scientist working for the government, the Home Office. And then me and my husband decided to get into property. Most people probably know this after reading Rich Dad, Poor Dad. So our pension's probably not going to give us much of a future. So we got into property ourselves just at the start of 2000. So we've been in property for 20 years now. It feels like a blink of an eye. So we started building our own portfolio, got into developments and conversions, things like that, built up a large portfolio of properties in the Midlands. Then the credit crunch hit. We'd actually decided that we were going to concentrate on development and refurbishment then anyway, and we're going to start offloading the portfolio, but the credit crunch hit. Interest rates plummeted, so we thought we'll just sit tight and hold on to everything, which we did. And I decided to start mortgage brokerage. So started the mortgage brokerage in 2009. And then basically found my passion is the best way to put it. I absolutely love that side of the business. I really do. I love the maths. I love the finance. More than anything, I like the problem solving, which is an interesting overlap with the forensic science, because I think that's what I always actually liked about the property side of it. So is the sort of problem solving side. Yeah. So I get to do that in droves, and as I always say, as a woman, I get to spend millions of other people's money. So what's not to love? So I really do love the mortgage side of the business. And we've still got a portfolio. My husband looks after that. Although since Section 24 came in, we have started. That was our final impetus to start selling a few. We will always be landlords, I think, till the day we die. But we've sold a few. And if anybody follows me on Facebook, they'll see our travels over the last few years, which have been mostly funded by our 20-year property journey. So that's been quite nice. Yeah. So we've still got portfolio properties, and most of my time is basically, spent on the mortgage business now, or travelling. It's a good mostly mix. On the mortgage business.
Yeah, well, I mean, I've seen that with you with the sort of forensic thing. I remember you saying that in the past, and whenever I have a sort of detailed query for you, it's literally like Sherlock comes to play, and it's just digging into what's the situation with this, and who's the tenant on the ground floor, and what's going to happen with this in 3. Like, it's just the way that your mind works to find the right product is it's something to behold. I've put a link to your website on the screen just in case anyone wants to follow up with you after this. But what we really want to dig in today is just some of the common questions that I've been seeing surrounding mortgages and bank finance generally. with relation to coronavirus, COVID-19, the pandemic. There's a lot of announcements being made, but there's still equally a lot of uncertainty. And it would be nice if we could just try and get some of the latest information and clarification on that. The two biggest subjects that we're going to cover, first of all, are mortgage payment holidays, and then we're going to look at sort of ongoing mortgage activity, what the banks are finding, what they're feeling and thinking about applications that are going through, future applications and that sort of stuff. And then also, if anyone's got any questions more generally or specific to your own circumstances, we'll have plenty of time for that as well. So we can, I guess, just jump straight into this, Lisa. I want to make it as valuable as possible for people. And if we go back to the mortgage payment holidays, I mean, this is something that was announced probably coming close to 2 weeks ago now. I think they first started mentioning the fact that first of all, owner occupiers, and then laterally buy-to-let investors and possibly even people with commercial loans might be able to get some sort of relief over the coming months. You still there? Hello? Oh no, this could be terrible if I've lost her at this moment. Literally the worst possible moment to lose Lisa here. Lisa, I can see, what is going on? I can see your, yeah, I don't know. She's gone. I'm gonna hang up on Lisa and I'm gonna call her back. So bear with us for 2 seconds. Let me do that, and I'll maybe sing you a song or something whilst we're trying to get her back on the line. Let me see how I do this. Okay, we are dialing. Fingers crossed she comes back.
Hello. Hiya. I could hear you.
Oh, sorry. I don't know what happened. Probably on my side, but literally the worst possible moment to lose you.
No, that's all right. I think the networks are struggling anyway.
Yeah.
But I could hear you. You just couldn't hear me.
Okay. Well, we've got you back now, so that's great. So yeah, I guess, talking about mortgage payment holidays, the first thing I suppose is, what does it really mean to investors, to buy-to-let landlords?
Okay, so yeah, as you say, it was first introduced for residential mortgages, and then quickly buy-to-let mortgages were added. The reason buy-to-let mortgages were added was because the tenant said, "I don't have a mortgage. What about me? I can't pay my rent." So the buy-to-let mortgages were added to help out tenants, not to help out landlords. Okay, so it's really important that people realise that. The idea was to help out the tenants. So the aim and the message is that if you take a payment holiday, you are to pass that on to your tenants. So equally, tenants should understand that if your mortgage is £200 and the rent is £500, you'll be reducing the rent by £200, not by £500. Okay, so, but I think it is really, really important. I am being contacted by a lot of people who are saying, can I use this for a deposit? Can I use it for a slush fund? Can I use it to, pay off my car loan? And it isn't. For the buy-to-let landlords, it is meant to be a rent offset to help out your tenants. And that was why it was introduced for landlords. Wasn't because they're suddenly thinking we need help. It was to help out the tenants who are saying, but I don't have a mortgage and yet I still can't meet my rent.
Okay,
so I think that's the first important thing. Now, there is nothing to force people doing that. And if you phone your lender won't say, prove to us that this is going to the tenant. However, if your tenant, trots off to shelter, or after all this is over, you try and evict them for non-payment or whatever, all of this is going to come to light, that you had a payment holiday and you didn't pass it on to your tenant. Okay, so I think people have got to realise that this is everybody helping each other, and the idea behind the buy-to-let payment holiday is to offset it against the rent to help tenants who don't have mortgages that they can go and get holidays for. So that's the first thing that I just want to sort of stress. I would say that landlords also need to be going back to tenants and telling them first that they need to be claiming for whatever they can.
Yep.
There's the universal credit system has been speeded up miraculously. There are, have they contacted their loan company, their credit card company, their utilities to see if they can get delays on paying those? And then obviously we're still waiting for the final details, but there is the employee income top-up, salary top-up, the staff employee retention scheme it's called, and then we're highly likely to see something for the self-employed in the next day or so.
Yep.
So tenants need to be exploring all of those options before they force you down the route of going for a payment holiday. And the reason why you want to treat it as a last resort is I am concerned about the impact on credit files. To come back a step, these aren't holidays. This is just a deferred payment.
Okay.
So the interest will still be charged on those missed payments. Think of them as missed payments instead of a payment holiday. So interest will be charged, and how and what each lender does with it in the future is down to each lender. So again, that's something that you need to clarify. It may be added to the end of your mortgage, at the end of your 20 years, 25 years, whatever, or whatever you've got left. Alternatively, they could claw that money back by increasing your payments in the future. That might not help if you've got tight cash flow, for example, and did this on a number of properties. You could actually find yourself in a worse position in the future if your payments go up as a result. So you have to find out how lenders are going to treat these payments in interest and future payments, and also, as I say, I'm worried about the impact on credit files.
Yeah.
The telling words for me were when UK Finance announced it, which is what used to be called the Council of Mortgage Lenders, the CML.
Yep.
They now called UK Finance. When they announced this and said that their members, which is about 93% of lenders that are out there, would participate in this scheme, their words were they will do their best to ensure it doesn't impact credit files.
Doesn't sound too promising.
Yeah, those words are very telling, I think. They will do their best. A big part of that is how it actually gets reported on the credit files, rather than them being, malicious in any way. The payments clearly can't be recorded as paid because they haven't been.
Yeah.
I doubt very much they'll put them as arrears, as missed. If you looked at a credit file, it typically shows a number 1, and then if it's missed for 2 months, it's a number 2, and then a number 3, and that's when you're in, couldn't get a washing machine at Bright House type territory. So I doubt very much that they're going to show it there. What I suspect may happen is that it will show a U, which is unreported, which lenders don't often worry about. Credit cards catalogues, you'll often see U's for those. They don't get reported every single month, and lenders don't normally, show much concern over U's. It's 1s, 2s, 3s, 4s, 5s, 6s. Payment arrangements, APs, that type of thing, that lenders worry about. What worries me, though, is when all of this is blown over, and lenders are looking back on credit files in the future, is that in March, April and May, there's unreported. And lenders' systems can be very, very sophisticated in terms of what they're asked to look for. It's not Joe Bloggs just sat there going, oh, look at that. The systems are told what to look for, thousands and thousands of pieces of information. And it just worries me that if a lender's looking to tighten lending or not lend, use reported during 2020 might be deemed as adverse in the future. And we have no real way of knowing that. If a lender declined you where you think you should have been accepted, they can simply say, we declined you. Adverse, didn't meet credit score, whatever. They don't specifically have to give a reason. And it can be a combination of things. So if they tighten up on something like this, but you've generally got a decent score otherwise, you could still not meet the lender's criteria just by your overall credit score, and it isn't something that we can actually identify. I could be doing the lenders a complete disservice here, disservice, and I don't mean to, because I love them all dearly. But it's while we're in the midst of a crisis, I think it's easy to say one thing. It's just how that is going to actually materialise later, and how it will end up reported on credit files. So my advice to everybody has just been, it is a last resort scenario. This is not, oh, great, I'm phoning, we're only, 2 weeks into the announcement of payment holidays, only, 3 days into the lockdown. Landlords should have had some, backup. That's why lenders ask for bank statements. That's why they ask for, proof of savings. That's why they ask for a job. Surely people can't be in that position already that they can't meet this month's mortgage payment. So it really is a last resort situation, I would be saying. And anyway, if you are meant to be passing that on to your tenants, go and speak to the tenants. What can they get first? Because you want to be doing payment holidays as a last resort, in my view. And it's purely, as I say, I just worry about when all of this has been forgotten, what the impact is actually going to be on people's credit files and credit scores. I would love to see the lenders all come out and say categorically, we will assure you that this will not affect your credit file, but we are not seeing that. We're seeing the we'll do our best quotes. So I just think people need to be careful of that. But as I say, also we have also actually seen a couple of lenders more in the commercial field, but they have categorically said they will regard it as arrears. It is vitally important, whether this be residential or buy-to-let or commercial, that people don't just cancel their direct debit without discussing it with the lender first. That is absolutely crucial, because if you do that, it definitely will be regarded as a mispayment, as an arrears.
So you need to have that discussion with them.
Yeah, absolutely. Discuss it first, find out the implications. If you can get a name, if you can record the call, if you can get something in writing where they assure you it won't affect your credit file, then great, at least you've got some comeback. But as I say, even if it doesn't affect your credit file, it's how it is going to be reported on the credit file and how that will look in a year's time. Really important thing, once this is all settled and it's all over, everybody go and get your credit files and just have a look and see what the impact actually is. And if it is showing as arrears or mispayments and they assured you it wouldn't, you should be able to get that changed on your credit file. Okay,
I think we can say that we've all had fair warning there then, Lisa. Thanks for that. In terms of the duration, at the moment they've said it will be for 3 months, but I guess there is a real chance that this could go on longer than that. Nobody really knows at the moment. Is it just a case of if it's 3 months and it goes on, the banks will look to extend it, or do you think it's 3 months line in the sand? After that, we can't really afford to give more holidays? Like, how do you think this could play out longer term?
I think they will probably be more forgiving if it does play out longer term. I think it will depend on direction from the government, which is then coming through to UK Finance and also the FCA. Just as a bit of an aside there, buy-to-let mortgages aren't regulated by the FCA, but the FCA have basically said, we're watching you. So they are expecting lenders to show forbearance and to play ball. Even though buy-to-let is unregulated. So it's quite good the FCA are keeping a watching brief there. So it depends on the direction from the government. I think if we're on a continued lockdown and people are prevented from going out and doing their jobs, I think we're highly likely to see it continued until the lockdown is finished. I think if the lockdown has finished and people can continue their jobs, then I think it will cease, and people will be expected to, go and do whatever it takes to start meeting their payments again. So I think the lockdown will be the key. Personally, anything I am saying, a lot of this is just my personal opinion.
Absolutely.
Getting a feel from various sources. But I think it will be linked to the lockdown. Because if people can get out and about and start working again, then I think the lenders will be less forgiving. Now, obviously, if people continue to have trouble, if you've lost your business or lost your job or whatever as a result of this, then again, it's really important to keep up those discussions with the lender. And at that stage, you're probably not going to care a fig about your credit file, to be honest.
Yeah.
It's just really, really important that please, whatever happens, whether you're a landlord or whether you're a homeowner or whatever, don't bury your head in the sand over this stuff. Keep talking to the lenders. I know that's difficult when you've got a 3-hour wait to speak to them. A number of them have produced email addresses and things like that. They are doing their best. And as I've said repeatedly, remember, there's people at the end of the phone line that are worried about their jobs and their health and their families as well.
Yeah.
So just be patient, try and get hold of them. A lot of people aren't doing anything at the moment, so 3 hours on hold for a lender is probably time you can afford.
Yeah, absolutely.
But just don't do anything without discussing it with them. And whether it goes beyond the 3 months, I think, will depend on whether we have a continued lockdown and people's ability to actually go and carry on working.
Okay. In terms of who can qualify for this, you said you don't really need to prove that your tenants have defaulted, but obviously at some point in the future, that could come back to bite you if you're just looking at this as free money. But originally it was owner-occupiers, then buy-to-let. Some commercial lenders are now offering this as well. Is that right?
Yeah, absolutely. They've had to really, because obviously if you've got commercial tenants in there and they've had to shut up shop, then you're not getting rents in, and the whole thing is all about keeping jobs and businesses going.
Yeah.
That's all of the grants for the small businesses and this type of thing is all about keeping businesses going and keeping jobs going. So nobody's incentivized to foreclose on a mortgage, or whether that be commercial or buy-to-let or residential. But again, it's speaking to the lenders and making sure they know. So, for example, like I say, a couple of the commercial lenders have said they're happy to do it, but they will still regard it as arrears.
Mm-hmm.
So you have to think of the implications of that in the future.
Do you have examples of who's doing that?
Yes, but I'd rather not name any lenders in particular.
Okay, fine.
If that's okay.
Yeah.
So, but again, it's a bit like asking your tenants, your residential tenants, what else can they do
Mm-hmm.
to get the rent before you have to take a payment holiday. And it's worth explaining to them that it could affect your credit file, it could affect your future ability to lend, and that might impact their home. It's no good if you come to the end of a mortgage term or the interest rate goes up and you can't refinance anywhere. So having a frank and open conversation with your tenant is probably well worth doing. On a commercial aspect, it's exactly the same. If you've got small businesses, they should be getting the grant, the £10,000 grant. Hopefully that should be in place in April.
Mm-hmm.
So the whole point to that grant is to cover rent. So again, that is not a freebie. It is to cover your rent. So if your tenants are getting that and or they're getting income as well for either employees or themselves, then that's what they need to be dipping into to pay your rent, so that you don't have to get a payment holiday, because all it's going to do is all come full circle. Again, your tenants are not incentivised by you getting arrears on your credit file and not being able to mortgage later on. So it's having those discussions with your tenants and finding out what else they can do to make sure that they meet the rent. And as I say, even if you do get a payment holiday, the idea is you pass on the difference or the payment holiday to them in rent, so they should still be finding the difference. So one of the things we've said is with tenants, these are our own tenants, is if they're getting the 80% job retention scheme, is that we'll look at waiving 20% of the rent.
Mm-hmm.
So if they're getting 80% of the income, they can pay 80% of the rent, and looking at things like that. So look at the alternatives before you end up having to go for a payment holiday, whether it be commercial or buy-to-let. But it does apply to buy-to-let, it does apply to commercial, it does apply to limited companies, it does apply to HMOs. But everything is about speaking to your lender and getting their individual take on it. So one of the lenders I can name, because they've gone public on it, is Barclays, and they have said they won't apply payment holidays to buy-to-let.
Yeah.
So whether they will continue to get away with that with the FCA looking at them, as I say, it's unregulated, so they're probably digging their heels in. But at the moment, Barclays have taken the stance that they are not going to give payment holidays for buy-to-let.
Yeah, I've seen some other stuff about Barclays. They seem to be pretty bad with everything, loans, credit cards. They're just saying it's just kind of flat no. So I imagine they'll be getting a bit of negative press over the coming weeks.
Yeah, exactly. And they're one of the the biggest lenders in the UK, so maybe they don't care.
Well, yeah.
But borrowers can be fickle. I suspect that it will be business as usual after all of this is over. So we'll see.
Okay.
But yeah, they have gone public and said no, they're not applying payment holidays to buy-to-let.
Okay.
At the moment.
There's a lot of people that have been asking about vacant property as well. It's all well and good if you've got a tenant in there that loses their job or is been put on this sort of 80% salary. If you've got either a whole property that you've maybe just finished renovating or maybe rooms within an HMO, I guess because the banks aren't necessarily verifying that tenants aren't paying rent, you could in theory still apply for this payment deferment on vacant property as well as for rent arrears.
Yeah, absolutely. There's no, although they've said we want you to pass this on to your tenants, that's the aim of helping tenants who put their hands up and said, but I don't have a mortgage, what about me? So that was the aim, but obviously to try and implement it and do it directly would be a nightmare. So really the responsibility is coming back onto the person with the mortgage to decide whether they want to go for a payment holiday or not. And as I say, I would be treating it as a last resort.
Yeah.
If you can, possibly afford to meet their payments from savings or slush funds or putting other things on hold, then that would definitely be my advice, and treat this as a last resort. But of course, if you need it, get on the phone or get on the email to your lender and don't do anything. Don't cancel direct debits or anything until they've given you permission. When it first got launched, lenders were saying we will require evidence. So, for example, I've got voids, my tenants are students, they've all gone home, or, here's evidence that my tenant has been furloughed or that the business is closed down or whatever. I don't think they expected the volume of calls and things that they're getting. So, I don't think most of them are probably going to be asking for evidence because they just won't have the time and the resources to do it. But they do reserve the right to. So don't be surprised if they do ask for some evidence of it. And if you don't have that, then you may not get the payment holiday.
Okay. And that kind of touches on the question about how to request or apply for this as well. It's not a case of calling up you or your mortgage broker. You have to go directly to the bank, and that might take a couple of hours, but there's no other choice really, right? That's the only way is to go directly to the lender.
Yeah, absolutely. And unfortunately, mortgage brokers, solicitors, accountants, your letting agent, all of those people, I'm really sorry, but there's absolutely nothing we can do about it. It's got to be a one-to-one discussion with your lender. And just to dispel a bit of a myth with some of the lenders, Birmingham Midshires is the most commonly quoted one, where it's, you've got to do everything via your broker, not this.
Okay.
Product transfers, remortgages, there's quite a few lenders that are intermediary only, but unfortunately not this. This is a direct conversation between the borrower and the lender, and nobody else can do that for you.
Okay, good to know. So a couple of questions from the group on this, and then we'll have a look at sort of mortgage applications and the future mortgage offers. Somebody's been asking, Chris was asking about changing the use of your property that might be in breach of your mortgage terms and conditions. Now, this was specifically in relation to a single let property that would typically be let out on a 6 or 12 month AST. If he was to provide it on a short-term basis as, sort of temporary accommodation for key workers, for NHS workers, I mean, is that the type of thing people could be looking at to fill vacancies in the short term without mortgage companies coming down on them?
It's a really difficult one because you would be in breach of your mortgage terms. The one thing that I'd say, aside from lenders, I'll come back to those, is being really careful about insurance, because it is highly likely to require a different type of insurance for short lets, HMOs, anything like that. So you need to be really, really careful about that, because breaching your mortgage terms is one thing, but if you have a fire or somebody injured or whatever in your property and you can't claim on your insurance, that's a whole different ball game. So I think the insurance is actually the most important thing to take away from that. On the mortgage, it's a really difficult one. With my mortgage advisor hat on, don't breach your mortgage terms would be my advice. With my non-mortgage broker hat on, practicalities. It's a really, really difficult one. And is it better to be meeting the mortgage payments? The issue that we've got, and what a lot of people don't realise, is it's not about the lender themselves. Quite often it is about their funding lines. And their funders will determine quite often where those monies can be spent. And also things like the building societies, they've got rules to their members that they have to meet. So, for example, a funding line or rules of a building society could be that we simply do not allow lending on multi-units, on HMOs. And if that was to be found to be the case, lenders could have their funding lines pulled.
Okay.
Or they could literally lose their license, their banking license, for breaching rules, lending rules. For their borrowers, obviously, with savings, building societies and things like that, they take their savings in and then lend them back out again. And rules come with that. So it's not about somebody in the bank going, I don't like HMOs, you can't lend on them. It is about funding lines. One of the banks, for example, who does short-term lets, you can't even use the short-term let product to do a HMO, and vice versa. You can't use the HMO product to do a short let.
Mm-hmm.
They're two completely different funding lines. So something that seems as simple as that, you can't even do that with this particular bank, because they're just completely different funding lines, and they stipulate what they can lend that money on. So it's a really, really difficult one. Like I say, with my mortgage advisor hat on, it would be don't breach your mortgage terms. With a bit of luck, we're only talking about something, relatively short term. Whereas tenancies are relatively long term. So changing a property to a HMO, for example, you've got other conditions in there. There might be planning, licensing for a start. For short let, depending on how the property's let out, again, you could be into planning territory. So it's generally not something that you can probably think about doing in the short term anyway. And fingers crossed for everybody, this is all over by the back end of the summer. Mm-hmm. So I'd be, again, it's a bit like the payment holidays, last resort. And again, if you are doing this, get on the phone to the lender. Ask the lender. If they say yes, if you can get the call recorded, if you can get something in writing, go for it. But I wouldn't be doing it without discussing it with the lender if you're doing some sort of change of use.
Yeah. Okay. And I guess, you put it to them, you say either I can't afford to make the rent because the property's empty, or we've got an offer to rent it out for 2 months on a license agreement, and, we'll be able to keep paying our mortgages. Which one would you prefer?
Yeah, exactly. And, if they make that decision for you one way or the other, then do whatever they say. So if they say yes and you've got something in writing or recorded, great, go for it.
Okay.
If they say no, don't do it. It's just not worth it.
Okay. And can we just come back to the bit on, you mentioned this earlier, but we've had another couple of questions about the proportion of the rent that actually covers the mortgage. So I think you used an example on Facebook where your rent might be £1,000 a month and your mortgage is £800 a month. In that instance, you're really only letting the tenant off with the mortgage amount, so they should still be paying the additional £400 per month, right?
Yeah. So if you rent for 1,000 and your mortgage is 700, you should be letting them off in inverted commas with the 700. They still find the 300, and then that 700, much like your mortgage is still due from the tenant. It's just you need to agree with them some sort of payment plan or what happens when things are back to normal. And obviously, I'd hope that people are forgiving of fees and interest and all of this lot. Let's just get the money back.
Yeah.
But if you can come to some sort of payment plan, but yeah, that was the idea, was that whatever you can offset mortgage-wise goes against the rent. Then you'll get people saying, but I don't have a mortgage and my tenants still need help. Well, if you don't have a mortgage, then technically all of that is profit. So, if you can come to some agreement with your tenant, like I say, if they get an income or universal credit or whatever coming in, find out what they're getting, what they're entitled to, and see if you can make up the difference by helping them out. It's a sort of we're all in this together, everybody's got to pull together type thing. But yeah, the idea behind the mortgage payment holiday was to pass over whatever your reduction is to the tenant, to help the tenant.
Okay, good stuff. Looking at mortgage activity and the lender's sort of view of the market generally, I guess this is going to have a big impact on them. Are you still seeing them willing to lend? Are you still seeing offers being made and applications progressing?
What mortgage activity is what I say at the moment. It really is a state of flux. Unsurprisingly, like for everybody, a lot of the lenders are a bit sort of caught rabbits in the headlights. And there's a lot of meetings, a lot of discussions, a lot of things still being decided. So it is a state of flux. We have already seen things happen though. Funding lines have been pulled from some lenders completely. So they literally don't have money to lend.
Okay.
So it has tended to be what we would call sort of fringe lenders or bridging lenders. So lenders that are in very specialist space, or the bridging lenders, they're the ones that often go and use funding lines that have been pulled. So one of my clients only this week had a bridging loan pulled yesterday on a case that was meant to complete today. So, it can literally be that sudden. All the documents are signed, it was going to complete today, and the funding line pulled on the lender yesterday. So yeah, that type of thing is happening at the moment.
And I mean, if you've already exchanged on a property, you're sort of legally obligated to complete on it. And I mean, that could put a buyer in a really sticky situation, but the lenders, they can do that. They can pull funding at the last minute like that without...
Can't hear you, Michael.
Oh, have I gone?
You there?
I am, yeah. Can you not hear me? No. Phone's back in again. Can you hear me? No, gone again. Okay, sorry, we have lost Lisa once again. Let me just try and call her back quickly. If you've got any questions, guys, feel free to stick them in the chat box and we'll try to get to as many of them as we can. Just whilst I get Lisa back on the call. All the joys of technology. I'm going to blame this on the fact that everyone's working from home. And
Hello.
Hello.
Oh, I got you back.
Yeah. It seems to just be like Skype gets fed up after 15 minutes and decides to cut
that's
us off.
it. I think they give you about half an hour and then that's it.
Yeah.
Put you off.
Yeah.
So at the moment, the type of things that we're seeing, and I think we're probably going to see a lot of this, is reduced loan to values.
Okay.
So there's several reasons for that. One, nervousness about obviously the market and values holding up, but also there's an issue with valuers obviously going out. So I think what we're likely to see is a pulling back on loan to value so that lenders will rely on desktop automated valuations, but they're not going to do that at 70, 75, 80%. We've already seen pretty much all of the 85 and the 80% products pulled. And we're probably going to see that come down further so that the lenders can rely on the automated valuations. Again, Barclays, interestingly, today have got rid of all products over 60%, whether that be buy-to-let or residential, and it will be because of relying on automated valuations. So that's what we're likely to see a lot more of. As I say, we have seen complete funding lines pulled and lenders pull out altogether. But I think for the bigger lenders, the bank-funded lenders, those are the ones that are likely to stick around, but we will see them pulling back on loan to values. Increased criteria. A couple of the banks have said that they either won't lend or are going to look a lot closer at anybody who's self-employed rather than employed. Hopefully, when the government announced the help for the self-employed, that might ease up a little bit. But at the moment, they're very nervous of the self-employed market. Not surprisingly.
Yeah.
So we're seeing that. a lot of people, when the base rate plummeted again, well, when am I going to see this passed on? If you've got a base rate tracker, then it should be automatic. My husband was only joking yesterday that when the rates go up, we get a letter the next day. When they go down, it takes them a month. But you should start seeing, letters. We've seen a couple this week already from lenders if you're on the base rate tracker. So they should be coming down. If you are on a standard variable rate, then it is at the lender's discretion because it's not linked to the base rate. We haven't seen many SVRs drop. Some of them have actually increased.
I saw that, yeah.
So fixed rates, if it's an existing fixed rate, it will stay as it is, so that's not going to move. For new fixed rates, we've had quite a few people email and say, can I hold off on that, or is there any other products available? The vast majority have actually gone up. And that was actually, before coronavirus sort of took hold in the UK, rates, the new fixed rate products that were being issued were actually higher, not lower. And given what's just happened with the lockdown and everything, I really don't think you are going to be seeing those rate cuts passed on to new products. It's highly likely to actually be the other way, and lenders actually increasing their margins. The margins were paper thin anyway before because there was so much competition in the market. So they just didn't have anywhere to go, really. And then with all of this as well, I don't think we're going to be seeing any rate decreases as a result of the base rate, only if you're on a base rate tracker. And some of those are going to have floors. So particularly if you've got commercial lending, then quite often they have floors. So it doesn't matter how low the base rate actually goes, your rate doesn't go below a certain point. So again, have a look at your offer and see what it says before you spend 3 hours waiting on hold to a lender to find out that it's not going to come down anyway.
Yeah. I mean, this must be having massive impacts on. I know everyone's distracted at the moment, but the housing market generally, if lenders are pulling out and changing products, removing products, just the normal resi market must be taking a hammering just now as well. Have you seen much of that?
Yeah, I mean, I'm on a couple of forums and discussion groups for sort of mortgage brokers only, and we're obviously all in it together and trying to share as much information as we can. But unfortunately, people are seeing offers pulled. If it's pre-offer, I just keep saying to people, have a backup plan. Offers aren't binding anyway, particularly in buy-to-let. There were some changes recently with mortgage offers on residential that makes them binding to a certain degree. But particularly on buy-to-let being unregulated, it's a whole different ball game, and commercial most definitely isn't. So if anything hasn't been offered, then it is at risk. There is no doubt about that, and have a backup plan. If something has been offered and it is a big lender that is bank funded, then I would like to think that will probably go through to completion. But I can't make any promises on that.
Sure.
But as I say, offers generally aren't binding, particularly in buy-to-let and commercial. So just have a backup plan and don't rely on it. If you've got any concerns at all, again, get on the phone to the lender. We are seeing completions, however. We've had, a few this week, despite this going on. So it depends on what stage things are at. But everything is in such a state of flux at the moment. It will almost take a couple of months to calm down, and then hopefully it'll all be over. And we'll be, back into another state of flux as everybody comes back again. But it's the big issue that I think we're going to have is with valuations, in all honesty, and how lenders are going to feel about those, about doing desktop valuations. Yeah,
okay. I mean,
that's going to be the big issue.
I'm just looking at a question here from Matt Stevens, who said he's currently in the middle of a purchase, seriously considering either renegotiating, deferring, or pulling out. It seemed like a good deal 6 weeks ago, but far more exposed now. And I guess going back to what you were saying there about always having a backup plan, if you're buying this with a mortgage or with bridging, and you're kind of early on in that process, it might be a case that it is too much of a risk to proceed to exchange just now, knowing that funding could disappear.
Yeah, I certainly wouldn't be exchanging on anything without knowing that you've definitely got the money available. And as I say, I've got a perfect example of the money was there yesterday, all the documents were signed, and by the end of the day it had been pulled. So even only on Monday, I was speaking to the lender saying, "Oh, we're still okay? Yes, yeah, we're all geared up for completion on Wednesday. Right, you're not going to pull out on me. No, everything's fine." And then their funding line pulled out on them yesterday morning. So, the lenders themselves can be as in the dark as you are, really. So even having those assurances from a lender right up till the 11th hour, it can still, disappear, and that money is just not there. And, it's not, you can stamp your feet and, all you like and scream and shout, but that money is not coming.
Yeah.
And so it doesn't matter. They don't care whether you've exchanged, blah, blah, blah. If that money is not there, it is not coming. And, even if they've offered, we've got offers, we've got heads of terms, the valuation has been done, very expensive valuation as well. All been done on Monday. Yeah, absolutely, assurances, no problem at all. You're going to get your money. We'll complete on Wednesday. Tuesday, it's gone. Okay, so that's that is speaking from very personal experience. So yeah, unfortunately, in the current market, you absolutely can't rely on it. As I joked with somebody the other day, they said maybe I can pick up a bargain in a fire sale, and I said the problem is by the end of it, it could look more like a cremation. So it's if you don't have the cash available, which let's face it, most people probably don't, I would be very nervous about going ahead with anything at the moment that relied on those funds, and I would be looking to exchange and complete at the same time.
Okay.
So I would be very nervous about things like auctions and stuff like that. I would not want to be having a delay between exchange and completion, because you're committed to the exchange. So I'm committed to the completion once you've exchanged. So I would be asking for a simultaneous exchange and completion, because then you've got your funds and you can walk away from it. We all get annoyed about people walking away from them, or wanted the conveyancing process changed so people can't walk away from purchases at the last minute. But it's when things like this happen, you think, thank God I can. Nobody wants a chain to collapse. Nobody wants to lose a good deal or whatever. But, we're in completely unprecedented times. So needs must insist on a simultaneous exchange and completion so that you've got your funds available. And if those funds don't materialise, then it either waits until you can get them, or everybody's going to have to walk away.
Yeah, good advice there. Okay, thanks for that. One subject I want to touch on, because I've had quite a few questions about this, are people who are currently going through renovations, development projects. They've got bridging, they've got drawdowns that they're either waiting on or that are scheduled for the future. Could the same thing happen to them? Could funding lines be pulled, and a sort of development loan that you're halfway through drawing down be like, could the second tranche of that be pulled and you'd be stuck without finance for a project?
Absolutely. Yeah.
That's
definitely.
worrying.
Because again, it's, a lot of the bridging lenders and that will be relying on funding lines. If that funding line's gone, they simply do not have the money. It's as simple as that. The money is just not there to lend to you. So yes, that can absolutely happen. I was only speaking to a developer, a big developer, only last week, who's had exactly that. He is halfway through a multi-million-pound site, and the next tranche of funds have been pulled. It's as simple as that.
Okay.
So let alone, a sort of small refurb or whatever. So that is the reality. I'm not here to sugarcoat anything. I'm not doing anybody any favours by doing that. So that is absolutely the reality. Similarly, there is nothing to stop the bridge to term type loan not going to the term, or the property being severely downvalued once you come to do the term loan, and not being able to pull out the money that you thought, or even all of your money. So all of that needs to be looked at, and is a possibility. It's a hope for the best, plan for the worst sort of scenario. So with existing lending, bridging and such like, breaching your loan terms, going over your loan terms, going beyond the term, that type of thing, the penalties can be huge anyway, even in the best market. So this again is definitely something to be speaking to your lender about. The vast majority of lenders don't want to repossess. They don't want to be landlords. They don't want to be property developers.
Yeah.
So keeping up those discussions with them and coming up with alternative solutions or whatever, and maintaining that dialogue is just so important. Some of them, that have indicated that they will consider payment holidays and things. So it might be that if you can get 3-4 months of payments that you can use towards works that they weren't going, that they're now not going to lend you, for example, that might be a way around it. If that will obviously give you enough. So again, it's having that discussion about how you can all end up where you want to be. There is the odd bridging lender that wants to become a landlord. So those are the ones you don't really want to cross and breach your terms.
Yeah.
But the vast majority of them definitely don't want to be, and they will work with you where they can. But as I say, their hands may be tied, unfortunately, by their funding lines as well.
Okay.
We've got just have that.
We've got an example here from Julio, who's said he's right in the middle of an HMO renovation, bridge to term product with Shawbrook. Does Lisa know anything about possible help in case you go over the term of your bridge? And I guess, as you've said there, it's just a case of going back to the lender and having that conversation with them.
Yeah, Shawbrook are now a bank, thankfully, so they're well funded. We've had communication from them, which is, and again in inverted commas, a sort of business as usual. Yes, they're pulling back, not surprisingly, but they are one of the lenders that are saying come and talk to us and have a conversation with us, and that is across their entire range. They're happy to discuss payment holidays and basically help people get the project to fruition if there's any way that they possibly can. So yeah, one of the lenders that's definitely worth having that discussion with and seeing what they can do for you. I think the biggest thing that I would say is just don't take the mickey, with lenders. Don't, this is an opportunity to put a bit of cash in my bank, or to go and raise a deposit for something else. If you are upfront with the lender about your situation, and exactly what you have got and what savings you've got, and a sort of, well, if I put in this, can you help me out with this? You're going to get a far more positive outcome than just throw your hands in the air and say, you need to help me out, otherwise you can have the keys back. That's not going to help anybody.
Yeah.
So raise your savings if you need to. Show them what you've got and what you can put into the deal, and hopefully they'll work with you and it'll all come good in the end.
Okay, good stuff. One final question, if you don't mind, Lisa, and then we'll wrap this up, because we've had it from a couple of people. So Tom Charrier's asked this and Margot has asked it as well. In terms of this is going back to the 3 months that we've got available. Is there any guidance, any restrictions on how quickly you need to be speaking to your bank? Could you try and stave it off for a couple of months and then take that 3-month deferment at some point further down the line? Is there any, do you need to claim it by a certain point? Will we lose out if, Margot said, will you lose out if you don't take it up straight away?
It's a good question, and one that I was actually researching yesterday and it haven't got the answer to because it's pretty vague. Because what the payment holiday announcement sort of announced was this starts it from March. So is that effectively saying March, April, May, and then you can't have it? Or can I have it May, June, July? And again, there is actually no firm agreement with that, because I think it's been left down to the lenders to decide. So I would say at the moment, people are literally reporting 3 hours, on hold to lenders, or literally phone lines just been cut off. They just cannot cope. So, there are lenders who have literally just cut off the phone lines. So it's a case, I would say, of maybe give it, till next week, and hopefully things will calm down a little bit. And then spend a bit of time phoning up your lenders and having a conversation with them. And all I would say is that's a discussion to have with the lender. If you say to them, I'm okay for the moment, but can I apply for this in May, or can I apply for this in June? And they should be able to tell you what their policy is and whether they're effectively saying, no, it's March, April, May, and then that's it. And then we'll review it in light of whatever happens. Or, yes, that's absolutely no problem. Don't forget, a lot of lenders will consider payment holidays anyway. So some mortgages actually have them written in as a flexible term of your mortgage is to have a payment holiday, but those are slightly different. That is where you've often built up equity in the property, made overpayments, and effectively you're borrowing those payments back. Okay, so that's a flexible term that you will see in some mortgages, but a lot of lenders will actually discuss a payment holiday anyway. It's just that they're doing this as more of a blanket thing because of the whole CV thing. So it's not to say that if you didn't manage to get through till September and then it was like, that's it, I've literally run out of savings, that a lender wouldn't discuss a payment holiday with you then. So if anything, they'd probably be more forgiving because you've tried to do it yourself up to that point and then run out. So I wish I could give more because advice on that, because it's an area that I've been looking myself. My impression that I've got is that the blanket, everybody's on board with this apart from the odd lender which we've named, then that's a 3 month, let's see what happens at the end of 3 months, March, April, May, then let's take a view. That is the impression that I get from the announcement. But as a general point, I would say if you're getting into trouble as a result of this in August and September, get on the phone to the lender and I would imagine they'll be forgiving, but taking into account what I've said about being careful about the credit file and the impact on that later.
Okay, perfect. Thank you so much for that. So I've had your website on screen throughout the duration of this, Lisa. I mean, in terms of applications, in terms of looking for a mortgage broker, is there even any point in starting applications just now, or should people just be sitting on their hands for a couple of months? What's your view on that?
Oh, really good question. We're manically busy, so I think that says a lot. Obviously, it's a lot of trying to get things to completion or trying to replace things that have gone pear-shaped somewhere else. So we are really, really busy. But, there's a flip side to look at this. We've got a couple of portfolio clients that we're restructuring portfolios on, who actually twofold. One, would rather the money be sat in their bank account, particularly at times like this, so that they create in their own slush funds. There's actually, it's a good opportunity to look at your portfolio and see if there's any restructuring, and also because there might be opportunities to take advantage. And I want to temper that with, this is not about taking advantage of people, okay? Desperate sellers and all of this lot. But, there will be opportunities at some point, maybe now and maybe a few months in the future. And, the investors want to put themselves in a position where if things sort themselves out, they can do that. At the end of the day, it's like I say, property is about problem solving. If you can solve a problem, that's where you make money. Despite all of this, we've actually got a number of portfolio investors who recognise that actually there could be an alternative opportunity here and putting some money in the bank. I've had a conversation only today with somebody who's got multi-million-pound property in London and unencumbered and wants to raise some money against it because there could be opportunities coming up. There are definitely reasons for us to stay active, which we are. We're all working from home. Me, Amy and Cheryl are all working from home. We were completely remote anyway, so our systems were all set up to carry on as they are. So actually for us, it's actually been no change. It's just we are reliant on the lenders. We can only do so much. But there are a number of lenders that are, as I say, in inverted commas, business as usual. And lenders make money by getting money out the door at the end of the day. So they know they still need to do that. It just may come at a higher price, lower loan to value than what we've been used to the last couple of years. But where we're concerned, definitely still in business.
Great stuff. Okay, well, thank you so much for your time today, Lisa. That's been extremely helpful. I know you can't see the comments, but loads of people are very grateful for your time and appreciative of your advice. So on behalf of them, thank you. And I'm sure we'll speak again soon in the not too distant future. And I hope you stay safe and just look after yourself.
Yeah, same to everybody who's listening. This virus is really, really nasty. The whole stay-at-home message, I cannot drive home enough. It is really, really nasty. We've got family on the front line in the NHS, and it is not one to be mucked about with. So everybody, just stay safe, look after yourself, look after your family, and that seriously at times like this is the most important thing.
Yeah,
it really is.
Completely agree. Great stuff. All right, thanks again, Lisa. I'll speak to you soon.
Super. Thanks a lot, Mike.
Cheers.
Take care.
Bye.
Bye.
Okay, guys, hopefully you found that useful. I'm just going to wrap it up here. I said to Lisa I wouldn't take any more of her time than an hour, and we're right on that mark there. So I know there was a couple of questions we didn't quite get to. Tom, in terms of lenders allowing switching from repayment to interest only, based on what Lisa said, I guess it's just a case of having that conversation with them, and hopefully you'll be able to get a good response from them. The plan for us is to put out as much useful information as we can over the next couple of weeks to help everyone, whether you're an investor, a landlord, still employed, and you've got a couple of properties on the side, whatever situation you find yourself in. If you've got some sort of property interest and you're wondering how everything that is going on is going to impact you, how you can survive the next couple of months, we're going to be putting on calls with accountants and tax specialists and a whole bunch of different people. So, completely free. We'll be putting them out live 2 p.m. most days that there's a good subject. If you've got suggestions for subjects, let us know. If there's something on your mind, let us know, and we'll try to bring someone in who can help with that. If you want to get notifications for those calls, subscribe to the YouTube channel, and they should ping up in your notifications when we are going live. I don't want to spam you all with email. We'll put it on social media. Obviously, we'll put it on YouTube. But yeah, thanks for joining. Thanks for the questions. And I hope you're all doing well. I hope your families are all safe and healthy. As Lisa said, that's sort of priority number one. Keep in touch. Let us know how we can help. And we'll speak to you all soon. So thanks, guys. See you later on.